still have my economists here with me. That is Zah Jamin, who is a director and chief economist at Econometrics. We've got Tim Nyamo from Global Financial Innovations and Lesiba Mthatha, who is a chief economist at Investment Solutions. We'll be delving into the Reserve Bank's decision in just a bit, but let's just take a quick look at what's happening in the markets in the wake of that decision. Well, we're seeing the all share down 0.6%. It was down before the speech, and it looks like it's slid further into negative territory, no doubt because of this renewed strength that we are seeing in the rand. And onto the rand, if we just take a look at what it's doing, slightly firmer at 12.85. When the speech started, it was trading at around 12.90. So definitely dollar rand finding some respite from the Reserve Bank's decision to keep interest rates unchanged at this stage. So back with my panelists here in studio, and Lesiba, I'd like to start with you, given that you were bang on target with what you were expecting the Reserve Bank to say about the inflation targets, which are improved.
Yes, that the previous MPC was expecting it around Q4 to only fall into the target range and brought forward a full 2 quarters back to Q2. That's a very diverse statement. And I'm not surprised that one of the MPC members, even in the midst of these political concerns, saw it fit to cut interest rates. That's telling that the assumptions that are put into the model, as it stands, are much weaker, for example, on the currency, and more hawkish, for example, on oil than what the market outcomes are currently, suggesting that they've taken a more conservative approach. And going forward, these numbers could improve quite materially. We need to remember that there are statistical base effects that are at play here in food, and to some degree we'll begin to see it also in energy prices that could create a precipitous fall in CPI. I won't be surprised with CPI at 5% by year end. And
very, very optimistic view there. Tim, do you actually share Lesiba's optimism of CPI at 5% by the end of the year?
Well, it's a fair forecast. I tend to focus more a little bit on markets. You know, if you look at the structure of his speech, it was quite interesting how he structured it. You know, came out guns blazing at the beginning, saying, you know, inflation outlook is positive. You know, all the areas that the Reserve Bank looks after are doing very well. And then later on in the speech, he then starts to talk about things like, you know, your growth, domestic consumption, things like vehicle sales. You know, all those sort of larger macroeconomic things that are not as good as they could be. And then also the repeated highlighting of the political risks, because in many ways we are in a, you know, outside of the growth and the long-term stuff. We're in a very good position. It's just that, you know, every now and then we're getting these periodic spanners thrown in the works, and yeah, look, it's unfortunate. Making life a bit difficult. It makes life difficult. Although in some ways you could argue that at the rate the rand was appreciating, you know, trying to find the silver lining. You know, at the rate the rand was appreciating, you know, we might have started to have exporters and so on struggling. So you know, our president did kind of help things a little bit by leveling it out. But
help the exporters.
Azar, let me bring you in here. So the Reserve Bank did raise their growth forecasts slightly for this year as well. We're seeing a slight improvement on that front. What were your key takeaways from Lesiba today?
My key takeaways, without any surprise, I think Lesiba is spot on in suggesting that the short term.
I'm confused somehow. Lesiba. Are you saying Lesiba or Lesiba?
Lesiba.
Oh, my mistakes there.
Yes. Was spot on in saying that the inflation rate could end up at 5% this year, or even less. What is interesting and very pointed, yet again, as has been the case in previous MPC meetings, the longer term forecast, which is what the Reserve Bank focuses on, is still stuck in that 5 to 6% range. And until such time as they can be confident that that 5% level can be broken on the downside on a sustainable basis, I don't know that they're going to cut interest rates.
But what will it take for that long-term rate to be broken?
I was hoping that Rashad would actually give us more of the reasons. He said food prices likely to be sticky on the upside in the longer term. But they have mentioned in the past that it's administered price increases, especially tariffs. Now, if we get the electricity tariff reduction, if we get it, then that's a big blow in favor of lower inflation on a sustainable basis. But they're also worried about rates and taxes, pipeline increases, e-tolls, you name it. They keep coming in at levels well above 6%, and that's keeping inflation up. The other one that was really negative was inflation expectations, according to the BER survey, were higher, which I find remarkable, higher than previously. And the Reserve Bank must have been concerned about that.
Most definitely. And another fantastic thing is this anticipated decrease in the petrol price, and this despite the fuel levy kicking in on the 1st of April. But the Reserve Bank could not dodge the questions around the politics that have happened in the past 4 days. And you could tell that there was some concern regarding what has happened. Lisiba?
That was top of mind. In the first few sentences, he went to the political stuff. Here's the issue about a central bank. When you have a problem around finance ministry, and when there are concerns around potential flows that can come to the country by foreigners, then you incite a systemic risk that could create problems for central banking because their other mandate is about financial stability. When asked about possible interventions in markets, the answer given was that only when it becomes disorderly to the point that it could destabilize the banking sector that they will think about it. And that was interesting coming from the Deputy Governor, Daniel Minelli. He's the longest serving that he has been at the central bank, has looked at that part of the central bank for the longest time. So whatever he says, we ought to be listening very carefully. It means it was discussed, and if things were to go pear-shaped, it moves into a different institution, and they have to pull tools and levers to make sure that we don't get a systemic crisis, which could include other tools that central banks have that they could use. They rarely use them, but they could begin to use them.
Oh, another interesting thing I found was that he said that he'd be very concerned if S&P and Moody's would be looking at what happened in the 4 days alone to make their assessment on South Africa's sovereign rating. But Tim, should there be a cabinet reshuffle this week? Many are expecting maybe something happening over the weekend. Do you think that the market will be as forgiving to that in terms of its reaction? You're talking about rand strength now. Will this continue, or do you see a blow up in the rand should that happen?
I think a lot of it is, A, is there going to be a reshuffle, and then B, sort of what happens with the Ministry of Finance. But then there's also this thing of, up until now we've been under the impression that Brian Molefe would be put in there, although now news reports are saying that it might be someone else. What I also find very interesting is, when they talk about, who should be hired and fired in the cabinet reshuffle, Desmond Ruyen is under one of the guys to be fired, but he was supposed to have been our finance minister. So,
our weekend special.
it just shows, it's just, I think some of these things also have to be thought through a little bit better. Like, for example, do you recall someone on a Monday when, okay, let's say you reshuffle this coming weekend, surely maybe you should have just sort of let him finish the London leg and maybe not go to New York or whatever it is, just in terms of managing perceptions rather than all this sort of storm and thunder and everyone gets, panicked and so on. But the governor is right in the terms that there's this tendency to overshoot. But fundamentally, the dynamics are quite positive in that you'll always have money flowing back into South Africa. And then you also have to look at, well, if it's not coming here, where else is it going to go? And the rand has been very highly correlated to Russia. I mean, the Russian economy is not doing that fantastically. So, and then you have the issues in the US. If Donald Trump's not going to get his infrastructure bill, in many ways, then US markets are quite toppish to slightly overvalued. So then capital flows that might have been interested in looking for yields and returns in US markets are now going to be going to other parts of the world to try and find yield. So the unfortunate thing is we're in a very good position. It just doesn't help when you start having bad policy decisions and guys not sort of thinking it through. Well, on the other hand, you could also look at it and say that, look, last time it was, okay, I'm firing him and I'm changing. Whereas now there's like a week, I'm getting rid of him, but you let it go for a little bit, and then you say what you're going to say, and then it gives you, I suppose, an opportunity to assess the impact of your of potential actions.
Most definitely, but just let me cut in there, Tim, in closing a statement. So the Reserve Bank saying that they need a more sustained improvement in the inflation outlook, but they did maintain that they are at the end of the hiking cycle. So Azar, I pitch this question to you. When do you see a possible cut coming through, and by how much do you think it would be by?
I think we need to wait to see what happens to the exchange rate, which in turn is dependent on political events. Assuming the rand remains where it is right now, I think we could well have a rate cut by the third quarter. However, it's very dependent on that, and I've given my reasons. It's the longer term inflation outlook that really counts, and until such time as the Reserve Bank can be persuaded not to have a depreciated rand in its forecast, I don't see a rate cut necessarily coming.
Lesiba, your forecasts?
I would expect a rate cut towards the end of the year, but it's going to be a shallow one. Only 25 basis points if it were to happen. Because the whole improvement and the ability of emerging markets to be able to look at domestic issues is hinged on what's going on at the US. But if you get a tax policy that reduces corporate taxes from 35 to 20%, and you get that infrastructure spending go, you may find that the Fed begins to rev up their rate increases. And when that happens, it will leave emerging markets a little more naked, and the SARB would be very concerned about that. So if they were to cut, it would be shallow, but only 25 basis points towards the end of the year.
Tim?
I agree with Lesiba. One of the other things to point out, though, also is that if, for example, we see another 1 or 2 rate hikes in the US and we remain unchanged, in relative terms, we're lower. So there's also that to bear in mind. And then also when you look at the evolution of the last couple of meetings, sort of late last year, there was also one of the things the governor was at pains to point out was that they wouldn't necessarily match the Fed a cut or hike per cut, because there was a time when that was a concern. And I think it was the last meeting or the meeting before that where he was like, no, we follow what we see on our side of the fence, even though the international developments do play a role. So there's also that to bear in mind. But yeah, a cut before the end of the year, shouldn't be too much of a surprise.
Well, we're going to have to leave it there. Thank you so much, gentlemen, for your time. And I'm saying thank you rather to Azar Jamin, who is the Director and Chief Economist at Econometrics. We've got Tim Nyamo from Global Financial Innovations, and Lesiba Mthatha, who's Chief Economist at Investment Solutions. That's where we leave it for the CNBC Africa special. It's bye for now.